Jim, let's try to understand earnings season here and what's happening with the markets. It seems like profits are generally improving, revenues are struggling. How are you interpreting all of this?
Well, I think that the revenues aren't struggling. I think revenues are struggling for some and not others. And if you have revenue growth and you say the world's a good place eating, your stock will go higher. And if you have trepidation about revenue growth, IBM, your stock goes lower. It's an important prism and an important distinction to make. Some situations, people think that the revenues have to slow down regardless of what the company says. That's Intel. But other situations are being rewarded. That's Apple. So what I want to do is, with the exception of the banking group, distinguish between who has revenue growth and therefore making money for shareholders, Pepsi, and who doesn't have revenue growth and is therefore not making money for shareholders, Johnson & Johnson. So the revenue prism is alive and well, and it's only, I think, a glossed over view that no one has revenue growth. If you have revenue growth, you do well. And I think that that's going to continue. You look at a Boeing, which we've been buying for action alerts. I think they have phenomenal 7-year revenue growth. So that's going to go higher. Freeport may have revenue growth now that China's come back because they engineered a soft landing. So, Alex, what I think that it's business as usual is what I'm saying. That there's a presumption that no one has revenue growth, so therefore the market's not doing well. And it's kind of the opposite. It's like there's some guys who really have a lot of revenue growth, and you want to find them, whether they be United Technologies, whether they be 3M. 3M gets revenue growth from organic new products. Okay, Abbott's getting revenue growth from organic new products. So, yeah, Pepsi has a lot of organic new products, and so companies are inventing themselves now. Should the market not go up if the revenue doesn't have growth? Well, if you're able to return, if there's no growth, no revenue, if you're able to return capital through good dividends, like the pipeline companies, then you will be rewarded. But who's getting a multiple and who's not is very typical. It's companies that have both good earnings and good sales.
Now, you said to leave out the banking sector.
Right.
How do you then rank that in your
banking sector trade? And there's a lot of controversy over this, but that should trade at this juncture, and I don't think that you can say this time is different, off of improving credit trends, because you don't get revenue growth before you're improving credit trends. First, you have improving credit trends, and then revenue growth comes. Obviously, if there's no job growth, you won't get revenue growth. But I think that you'll get acquisitions to make growth. But I think that people are the market is being short-term incorrect on not noticing that improving credit should be what drives stocks. The market's just not right.
Marcus is not right.
Yeah, I mean, the market can't be wrong short term. What was Cirrus Logic doing at 10? Okay, it's at 19 because it didn't know that Apple was going to get a lot of business. I mean, the market's making a series of incorrect judgments in part because of algorithmic trading. It's just lumping everything by the sector, and some sectors and there is bifurcation within the sector, but the market's just not acknowledging because of the power of the ETFs.
So real people have to find the real stocks that have
Yes, they do. I said that last night. I said, look, you may think the ETF, the XLF trades the same, but JP Morgan was up 33%, Bank of America up 5%.
Right.
The XLFs are lulling people into thinking it doesn't matter, and that's wrong.
And we'll get to the ETFs in the Mad Money postgame, so thank you, Jim. And you can get all of Jim's great stock picks at CramersPicks.com and follow him on Twitter at Jim Cramer.